Hi everyone, this is Mark Scheller, top 1% St. Louis Realtor. Okay, back today with another video, and this one is called Wave Goodbye to PMI. So what in the world is PMI, dude? PMI is private mortgage insurance. For loans greater than 80%, like a 90% or a 95% loan, there is an additional fee called PMI on your loan. This fee is meant to protect lenders in the case of a default. PMI extracts either $100, $200, or sometimes even $300 a month from a typical homeowner's budget, which is not cool. Just say no, especially when that fee goes on for 3 years or 5 years or 7 years. So let's look at the numbers, and here come some visual aids over my shoulder. Okay, so let's say that you bought a house 2 years ago for $300,000. As an example, let's say you had a 95% loan on it for $285,000. You are paying PMI on that loan every single month until you get 20% equity in the house. So on a $300,000 home, you would need to get your loan amount down to about $240,000. And that would qualify you for the 20% equity, and then you can drop your PMI off. But here is the challenge for most. Paying down a loan from $285,000 to $240,000 can take years, unless there is another way, and unless you know someone with experience who will make a video about it. Okay, so home values in our region are increasing at record rates, with some 6% and even some whopping 9% appreciation rates per year. So instead of waiting to pay down your loan, how about you consider looking at how the value of your house has gone up in order to try to get that 20% gap that the lenders are looking for. So after a 6% and a 9% appreciation rate, that same $300,000 house 2 years ago could now be worth $346,620. Yahoo! Okay, in the last 2 years, the $285,000 loan amount has now been paid down to about $275,000. So for this exercise, you now have a $275,000 loan on a house value that's been bumped up to $346,620, which is no longer 95%. It's now 79%. I know, hold on to your hats. Okay, so at this time, that means that you could apply and you could make your PMI go bye-bye. So here is your PMI, which is at what, $200 a month. Here is your PMI, and what you could do to that PMI is you could do this, and you could do that. Okay. So here is your plan of attack on how to save that money. You get in a professional appraiser. First thing, get a professional appraiser to appraise your house. It might cost you $400 or so, but you'll make that back in just a few months. Number 2, call your lender. The phone number is on your statement, and tell them you want to cancel your PMI. There is usually a 1-page form for that. So you file the form. You send in a copy of the email, a copy of the appraisal. You get the cancellation, and you save some fat stacks of cash, okay? This stack of $100 bills, this cash, is not real, but this advice is. $2,000, $3,000, $4,000 a year is right there. It's like low-hanging fruit, and my advice to you would be, go get it, okay? And that, ladies and gentlemen, are my thoughts on saving you some money today. Thank you for your attention, everybody. And remember, when you need a seller, call Mark Scheller.